It is May of 2022, and have interest rates gone up? Yeah, they've gone up a good 0.5 point. Are they going to continue to go up? Probably going to be some more increases in 2022. So what does that mean to you as the investor? Well, I'm going to tell you the type of investor that's going to be cleaning house for the next several months or year if they play their cards right. Stick around. Let's go! So we've been hearing and sometimes seeing instances in which the rising interest rates are having effect on deals. In some cases, offers are actually coming in below pricing guidance. Sometimes we're seeing a little bit longer due diligence periods because they know they're going to have to be working with the lender. And of course, in some cases, buyers who went to contract prior to interest rate spikes are now getting calls from lenders about the interest rate spikes. That has caused some buyers to go back to their seller and have a discussion about retrading on the price. Not a position you want to be in. I wanted to give you a little of my perspective as a multifamily broker who thinks from 30,000 feet up and who thinks long term about what is the best way for any one investor to accumulate the most number of units over the longest career. There's a couple things I've seen as a multifamily broker over the last 5 to 7 years. Number one, there's been so many new syndications that have been born and bred, and most of those syndications, if not the vast majority, have been those that sell in 3 to 5 years. So their model is very concentrative on interest rates and exit cap rates. And a second phenomenon I've seen is that because it's been a seller's market for such a long period of time, that the second the tiniest little change or possible change in that seller's power occurs, i.e. interest rates increasing, then almost as if every buyer in the world got together on a conference call and said, we need to splash the world with prices are changing, interest rates are going up, cap rates are going up, sellers' values have to come down. And so the chirpings begin all over social media, phone calls, emails, talks with brokers, talks with sellers. It's almost like a known team effort to create an environment or a storyline to put sellers on notice that the world's starting to change. But I would be very, very careful to try to jump on that bandwagon because it's gonna backfire. Multifamily is the investment of the future. There is no less demand today than there was 60 days ago when their interest rates were lower. And that is evidenced by the fact that there's still a tremendous number of investors after the same very few products for sale. And if nothing else, listen to this video right here about all the reasons why multifamily will continue to have an excellent path into the future. Can rising interest rates affect values? Sure, but everything is relative and it depends on to what level. I understand that higher interest rates can lower cash on cash, and I've also heard from many investors that it affects an exit cap rate. Short-term holding syndications, in my opinion, you have to be careful not to let media, social media, your other syndication friends lead you to believe that the market is going to start freezing or going down in value. And here's why. There are and always have been a minority of investors that are super powerful and win a lot of these deals that are long-term holders. And long-term holders are going to clean house in this environment. While long-term holders are affected by increased interest rates, it is at a much lesser impact than those who hold short-term. In addition, long-term holders only really look at exit cap rates to plug it into a model to come up with some sort of IRR to put in a prospectus for their investors. Otherwise, they really are worthless because you can't predict what exit cap rates will be in 10, 15, or 20 years. So these long-term holders, who own the most number of units per investor, by the way, because they rarely sell, continue to get bigger and more powerful, which makes them look sexier and better during multiple offer situations. And they are keenly aware that all of the other short-term holding syndications are far more affected by these rising interest rates because they're short-term holders. And they know the effects of the exit cap rates are going to bring in their offers for less. So, those investors who concentrate the most on buying good real estate and being flexible on the timing of that sale will always exit at a tremendous sale price, and payouts will be fantastic to their investors, rather than buying good real estate that's dependent on a certain exit period. If you just buy good real estate, increases in interest rates of a half point to a point and exit cap rates trying to predict those have a much less impact because you're in this to time this at the right time in the future rather than letting a constrained time period dictate your entire performance. Now listen, I get it. If you're a syndication that's predicated on 3 to 5 year holds, there's not much you can do. I'm just telling you that if you think the entire market is thinking like you do in that values are going to come down in some dramatic fashion because interest rates have gone up, I'm telling you otherwise, that there are long-term holders that are going to take advantage of this situation. Just think about it. 60 to 90 days ago, you were plugging into your exit pro forma probably 4.5% and 5% cap rates. And today, they're over 5% cap rates if I were to survey the most number of investors who are shorter term holders. And 5 years ago, you were probably using 6 to 7% cap rate exits, when in fact they became 4 and 4.5% cap rates just 2 or 3 months ago. So you were wrong again. I'll give you my prediction for the next 12 to 18 months. And I don't mind giving predictions because I don't mind being wrong. We're all trying to make predictions into the future. I predict that yes, prices will probably at worst flatten a little bit for the short term as the market adjusts and sees what's going on with interest rates. But I certainly don't see values going in reverse because two things are still at play. Number one, there will probably be less deals that come for sale over the next year because sellers only want to come out at optimum times. And number two, meanwhile, rents are continuing to skyrocket. So when that pause ends, whether it's 6 months, 12 months, when the sales come back to market, they will be at tremendous prices. So now is still a good time, in my opinion. I hope this video was resourceful and didn't upset too many people. I'm just a multifamily broker in this field every day, and I get tons of calls and emails and hear the conversations. So I'm just someone who's the mailman of the message to you from what I'm seeing in the field. If you like the video, please give me a like down below. Make sure you subscribe, and I'll see you guys on the next one.